Hey everybody, it's Seth and Paul for the Everything Money Channel. Welcome back to our show. Usually we talk about stocks, real estate, investments. Today we're talking about the weakening U.S. dollar. Obviously 2020 was an unprecedented year and the dollar is depreciating. It could be for many years to come. What does this mean to normal people? This is our show. I'm a normal person asking someone of great wealth, power, magnitude, and handsomeness, my captain, my Uncle Paul
and
here.
girth.
And girth, really, what does this mean for a normal person? And we have some people on our Patreon overseas who are wondering what this means to their currencies. So with the influx of different forms of currency, whether it's crypto or overseas interactions, we're intrigued to hear what Uncle Paul has to say. So I welcome in my confidant, my consigliere, my lover, my side piece, Paul Gabriel. How are you? It's Paul, right?
I'm wonderful.
Tell me your thoughts on this. I know it doesn't thrill you, but it is an intriguing topic that you've mentioned before.
Oh, I love the topic. It does thrill me because, some of the comments we got from people were, how does this affect my investment? Should I be getting into US dollars? Should I be getting? I think that's too much overthinking. You know me when it comes to investing for the long run. Don't worry about these things. We still have the #1 economy in the world. Even when China surpasses us in total GDP, they still have a long way to go on a per capita basis. But the one thing I've always said, especially in the last 20 years as the US national debt has increased a ton, if you expect the US dollar to get stronger over long periods of time, I think you will be disappointed. Can it happen? Yeah, I bought a house in Mexico in 2013. Back then, there were 12 pesos for every US dollar. Now it's 20 or 21. That is the US dollar strengthening relative to the peso. Now, it all depends on how every economy goes against, their currencies are relative to the US dollar. Mm-hmm. But overall, the US dollar is going to lose its value relative to today. And here is why.
Go on.
Let me bring up a very interesting example here. When you have a mortgage, Seth.
I do have one.
Okay. If you have a mortgage and your mortgage payment is $2,000 a month, okay, in year 2020, right?
Yep.
What's your income? Let's say you make $150,000 a year. Okay. In year 2040, let's say you're making 3% more a year. Let's say your income doubles to $300,000. What's your mortgage payment then?
$2,000.
$2,000. So what's happened here? You have made more money, but you're paying the same amount of money in your mortgage payment, principal and interest. I'm not including taxes and insurance in here because those will go up. This is what the US government wants to occur. How is your income going up here? I'm assuming inflation here. How do we get inflation? The devaluation of the US dollar will cause inflation. As they increase the number of dollars out there, when you increase the supply of something, what happens to the price?
Demand goes down and price goes down.
Price goes down.
Let me say that again. Say it again. Sorry,
demand can stay the same.
Right.
The supply goes up. Demand stays the same.
Price goes down.
Price goes down.
Yep, thank you.
So the US government, their goal in life is to devalue the heck out of that dollar. They're not going to say that. They're not going to talk about that. But devaluing the dollar also helps their exporting. And it allows them to take on more and more debt. And in the future, they're making the same debt payments, but at much higher dollars because their nominal dollars, how much they're making every year, is going up a ton. Okay? So think of it like you have a mortgage. If you're just getting inflation increases, I think 3.5% over 20 years is doubling your income, roughly. You're doubled your income, but your mortgage payment stays the same. So essentially, this mortgage costs you half what it did in 2020 relative to your income. Does that make sense?
Yeah, I mean, is this a safe assumption that everyone would assume? When you say double my income over 20 years, would people question that?
Well, GDP over long periods of time is how you look at income, right? And GDP growth actually over the last 30, 40, 50 years has actually been higher than 3.5%. But when you look at when you have a regular job, most times you get a 3 or 4% increase every year.
Yeah.
Keeping apart, getting a new position, getting a promotion, things like that. I'm not including that. I'm assuming your job stays the exact same. Over a 20-year period, you should probably be making about double the income. I can show the math behind that, but historically, inflation is about 3 to 3.5%, and that means over a 20-year period, your income about doubles every 20 years, okay? So let's apply that to countries. No different. Let me show you the example. You know what happened in the 70s, Seth?
I don't know. You're more knowledgeable than I, of course.
Well, we were both there at that time, weren't we?
In the 70s?
We had a lot of inflation. And when we were born, interest rates were sky high, 15, 20%. That's how they fight inflation, is by raising interest rates.
Yeah, I heard this was Reagan's fault.
Well, Paul Volcker did it.
Okay, go on.
Reagan did do that. Reagan did approve of it because it was the right thing to do to fight inflation.
Okay.
When you're increasing interest rates are basically the cost of money, right?
The cost of money.
Right? So when you borrow money, the interest you're paying is how much it costs you to borrow that money.
Okay.
Correct?
Sounds right.
Everybody get that? So when you borrow $100,000 to buy a house, the cost of it is the interest rate they're charging you.
Mm-hmm.
So if they want to decrease the demand for money, they increase interest rates.
Mm-hmm. But people are less likely to take out loans and mortgages.
Correct. So what happens to all costs? They start to go down. Right? When there's a lot of money out there, costs go up. When there's less money out there, costs go down. When they raise interest rates, it decreases the demand for money, and therefore lets costs settle down. Let's all the inflationary numbers settle down. That's how they fought big inflation. Now, let's look at the data here. This is a consumer price index. So what this is the inflation rate from 1970. This is the consumer price index. 37.8 in January of 1970, 76.7 in the 10 years in the end of 1979. That is over double. So doubling over 10 years is about 7% per year. That's a really high inflation rate. Mm-hmm. Okay? So in that 7% per year period of time, what did the US government do? The government, to take advantage of it, took on a lot of debt. Look at their debt here. They went from $371 billion in debt to $827. How much is that increase? Is that over double?
Yes.
That's over double. It's a little bit over double. But look at this interesting part. As a percentage of GDP, it went down 35% to 31%. So that means GDP, nominal GDP, grew a lot faster. They got a lot more income in. And they were able to pay on larger amounts of debt because as a percentage of GDP, they're trying to drive down debt as a percentage of GDP. How do they do that? With inflation. With inflation. It made, even though debt over doubled, as a percentage of GDP, it went down. Right? So just like your mortgage, if you had your mortgage at, let's say your total mortgage, let's say you never paid down anything. Let's say your total mortgage was $200,000 and you never paid any of it down. In 20 years, it's still $200,000, but before you're making $150,000, and now you're making $300,000, right? Mm-hmm. So as a percentage, you're at 133% here, and now you're at 66% here. It fell in half as a percentage of your income. That's all the US government's trying to do here. They're not going to tell people their face because saying we're going to devalue our currency is a very, very taboo thing to say in economies. And China, if you remember during the China trade war that Trump was having, they kept threatening to devalue their currency because it would have driven their exports much higher. It would have made things a lot cheaper. People abroad would have bought more. It would have hurt. Trump was trying to keep more in the US being built and manufactured. And China kept threatening to devalue their currency on purpose. So this is getting a little technical, but I want you to think about it in terms of your personal life. When you borrow money today for a house, your mortgage payment, as long as you lock it in for 20 or 30 years, is going to stay the same for that entire period of time. But in that entire period of time, your income is going to go up and your net worth is going to go up. So as a percentage of your income, your mortgage is going to go lower and lower and lower because here's your mortgage, here's your income. As a percentage, 100% here, a lot lower here. That's all the US government's trying to do. So everybody who worries about devaluation of currency, you got to realize this is a reality probably for a long period of time, especially with how much money we're printing today. As much as everybody wants these $1 trillion bailouts, these $1 trillion checks, it will come in the form of inflation in the future. But don't think for a second the government doesn't want to do that. They absolutely want to do that. They need to do that to have the same effect that happened here. Debt over doubling, but as a percentage of GDP going down. And look, it was pretty consistently going down until they skyrocketed a couple of years of increasing and then went down further. So you look like you're staring at me like, Paul, what are you talking about? Because I want you to talk about it because that's probably what everybody else is thinking.
You know, I agree. You have sort of educated me on the idea that when we print more money, in turn, long term sort of hurts us, and then normal people you see on the internet, normal people are saying, why can't we just print more money? What's the slowdown? Who's it hurting? Elon,
it's hurting the average person way more than it's hurting guys like me.
Yeah, Elon Musk tweeted, printing more money is just overall, paraphrasing, is just generally bad. And of course, when rich people say that normal people don't get another handout, like they get quite often, or bailout, when rich people
a few rich people get bailouts, and I'm much opposed to that.
Yeah, you are as well. But when wealthy people say that normal people shouldn't get more money from the government, it obviously doesn't go over very well.
No, that's not what I'm saying.
Go on.
What I'm saying is, if you want this check, don't complain later when your cost of living skyrockets. During in the 2000s, during college, remember I worked at Camelot Music Warehouse. You remember Camelot Music?
Oh my God, yes. I can't believe you worked
So Camelot Music was based in Ohio, Canton, Ohio, and I'm sure a lot of people out there know Camelot Music. I worked in their warehouse putting stickers on their CDs and cassette tapes. I remember all the staff getting really upset about gas prices, because that's when they started to go up. And I remember thinking to myself, like, this is a prime example, when inflation is there, when you need money today, you don't worry about the future ramifications. I'm cool with that. But in the future then, when those ramifications see their way through, which is through higher inflation and you losing more value of your dollar, what are you gonna do then? Is it another, hey, what's going on here? That's not good for economies overall. When you borrow more money today, you're taking away from the future because you have to use future dollars to pay that money. And anybody here who thinks we're not gonna have generally higher inflation, the last 10 or 15 years has been very low in inflation. I mean, we've had like 1.5%, 2% on the high side. Even the Feds has talked about raising their inflation target. They're purposely trying to increase inflation, and the way to do that best is through printing more dollars, right?
Yeah.
That's devaluing the currency. It devalues the US dollar, so it then takes more US dollars to buy stuff. So something that would have been $4 before is now $5 because you devalue the dollar, so you have to spend more of it to get the exact same item. That's all inflation is. That's why home prices go up. Because of the devaluation of the US dollar, which leads to inflation no matter where you're at. Youngstown, Ohio has lost half of its population since 1980, yet the median price of homes has gone up since 1980. We're always taught so demand is what matters. No. What matters also is the cost of things. Because at the end of the day, if lumber prices, copper prices go up, it costs more to build a house, more to renovate a house, therefore house prices go up. Do you see what I'm saying?
Yeah.
There are always ramifications to every action we take. I'm just trying to sit there and say, inflation's fine. In fact, we want a little inflation. I don't like inflation that goes like this. Like that's what hurt people in the 70s. They saw their gas prices skyrocket. Even in the late 2000s, you saw gas prices skyrocket.
Yeah.
I believe at one point we had 10% inflation annualized for the year, but then it came right back down. So these are the things that we talk. I don't think you should make your investment decisions based on inflation and the devaluation of the dollar. I think you should find solid investments, either real estate or stocks. In fact, real estate's considered a hedge against inflation. Actually, it does better because of what I said before. Inflation itself will just take care of things for you and just let things be. But just remember, guys, before you ask for something, realize there will be something to be paid down the road for it. And when what you're paying for down the road is higher prices on goods that you want. Inflation doesn't hurt wealthy people as much as it hurts the middle class, right? Because if you make $30,000 a year and a gallon of milk goes from $4 to $6, that's a bigger chunk of your percentage than if you make $300,000 a year or $3 million a year. That gallon of milk is still, it doesn't matter to you. You're like, okay, it's a lot more. So we talk about these things, and I know we don't try to make it about rich versus poor, but it's funny because we always complain that the rich get away with things. It's not getting away with something. They're just sitting there saying, fine, if this is what you want to do, let's do it. My life's not going to be worse because we print all this money. It's probably going to be better if we print all this money. There's going to be more disconnects in society and disconnects in investments. But this definitely does affect the average person way more than the top 1%. And it's not, but the funny thing is, it's the average person who wants it more than the top 1%. That's the ironic part about it. You can get I'm not getting a check. When they print all this money, I never get a check. I'm fine with that. That's fine. I don't care. but at some point it's going to be paid for. And in fact, if you ask me, as a person who's going to be looked at to pay for this debt long term, yeah, inflate the heck out of it. Because I want to pay less. I want to get my income going up. That way, when you tax me, you're getting more tax dollars from me at the 45% rate. Fine, inflate the heck out of it. It makes it. I'd rather have a high inflation. That way, they're not going to raise my tax rate as much as if it was low inflation.
It's an interesting concept. If this interests you more, you can join our discussion on our Discord channel through our Patreon. Our Patreon has been completely exploding. It's like 30, 40 people a day. It's completely absurd. But there are different tiers that you can join and join like-minded people if this resonates with you. Obviously, somewhat of a nerdy subject. When you start talking about numbers and math, I'm sure a lot of people may turn off. But if this resonates with you and you want to be a deeper investor, keeping this in mind, feel free to join our Patreon. As always, we ask you to tickle that thumbs up like you're tickling Paul's little belly. And make sure you subscribe. We do tons of videos. Gosh, 20-some-odd videos a week and 2 live streams a week. And patrons, we have our February Patreon only live stream coming up, and we do one of those once a month as well. So yeah, that's the end of the plug. Thanks for watching. Thank you, Paul, for your insight, and stay tuned, guys. We love you. Appreciate it.